Hello, I'm Kevin Flynn, and welcome to Avalon's Market Minute for the stock market week ending January 4th, 2013. Can you believe that stocks were up 4 and 5% last week? They were. What's more, they'll probably be up again this week as well. And then within 6 weeks, we will probably have given it all back again. The big rebound was due to the relief rally from the fiscal cliff deal, a rally that included no small amount of short squeezing. Some of the rebound was natural as prices had sold off in fears of no deal. Some of it was related to year-end and the need to mark up prices in the absence of a Santa Claus rally that had gotten lost. Some of it was computer-driven, boosted by blackbox and high-frequency trading programs. The first question is, why should the rally go on another week? The answer to that is simple, because there's no real news on the calendar this week. There is the European Central Bank meeting Thursday morning, which could go either way, but if Bank President Mario Draghi says anything market-friendly in this heated atmosphere, like an interest rate cut, or we're going to buy more bonds, stocks will take off again, especially European ones, which despite the deepening recession in the EU, have been steadily rising on central bank stimulus. Now, when the economic or earnings calendar is light, stocks tend to keep going in whatever direction they were headed the previous week, which is up. So unless there is something unexpected in the bad news from nowhere department, they should be up again. It's also a very common pattern in the first half of January, when the slate has been wiped clean, hope springs anew, and there's more pension money to put to work. All of this will lead to a burst of stories about how wonderful the economy is doing. It'll all be nonsense because the economy is on the same path it's been for the last 2 or 3 years, which is to say a sluggish recovery. But the press has to write something to explain price movements. So when stock prices are going up, paradise is around the corner. When they're going down, it's time to start buying diesel fuel and canned food. The second question is, why will prices go back down again? Because the fiscal cliff mini bargain was a mini bargain that just put things off. The debt ceiling battle will be much bigger and much uglier. The most common quote I read about Republicans now is that they are angry. And about the Democrats is that they want more revenue. In other words, they're headed directly away from each other. It's going to be stormy. Not only that, there's no reason to expect much in the way of positive surprises from the earnings season that gets underway this week, although it really doesn't get underway until next week. Finally, payroll taxes went back up. That's going to cut spending soon with the next paycheck, which for most people is Friday. And whatever does happen with the budget battle, you can be sure that some tightening will be part of it, whether it's tax increases or spending cuts. A grand bargain would help business confidence and spending plans, but will it be enough? And will we get it? It could be a long wait. I'm Kevin Flynn, and I hope you enjoyed this week's Market Minute from Avalon.